Mark is getting nervous about the state of the economy. No surprise. I get you, Mark. And is wondering if I should sell my positions and do laddered CDs. I'm invested for dividends and get a 4% return, but the stocks I've bought have greatly increased in value. One in particular has increased 148%. I'd like to capture that value before the next stock market drop, and I can make the same or better income with a safe investment product at 5%. What do you suggest? Mark also is 72, Shanna.
Mark, I don't suggest trying to time the market at all. So I would say there's a better case that this year is going to be another positive year rather than a negative year. But I think trying to time the market is very foolish. So if it's just because you're afraid of what's going to happen and you want to try to lock in those profits, then I would say don't do it. If you're comfortable with your with the investments that you have and the volatility that can come with those, I would say stay the course. Now, and if you don't need growth going forward, which I can think of very few cases that somebody doesn't need growth right now, especially with as much as inflation has cost the price of everything that we buy to go up. I don't see those prices going back down, and I see inflation continuing to be a thing going forward, and a thing that happens at a much at a faster pace than what the 2% inflation that we've experienced over the last decades. So if you need absolutely no growth, which I see you're 72, if you're healthy, your life expectancy can be at least another 10 to 20 years. And I would suspect that unless you have more income than you could possibly spend, then you do need to have some growth still. So if you go to laddered CDs right now, one of the problems that you're going to have, you may be able to boost your income to 4.5%, maybe 5%, at least in the short term. But we're looking at going into an environment where interest rates are going to be coming down. And if you've laddered those CDs, in 6 months or a year, you're going to have money coming due and you're going to have to find a place to put it. I suspect that the CD rates are not going to be as attractive as they are right now. So only if you don't need income now, you don't need growth in the future, would I go to a really preservation type strategy. And I think one of the mistakes that we can make in not only in our investment decisions, but in every decision in life is the black and white thinking. It doesn't have to be all or none when it comes to investments. If you're really concerned about the state of the economy and you want to shift to a more preservation type strategy, consider going 80% into a preservation and still leaving 20% of your portfolio in something that can get you some growth. So you could shift more conservatively, but I'm not really in favor of going all CDs.